Today's Wednesday, April 22nd, 2009. What you're looking at is the euro dollar. This is a 30-minute chart. I sent out a message today on this possible breakout to the upside. We had a continuation signal candle here. Here's that consolidation range that has been in place for most of this week. And here's that final breakout. And I had mentioned that what I'll do is wait for this pullback to support. Support doesn't always have to be an old swing high or resistance. Sometimes it'll move a little bit lower. Sometimes it'll come a little bit higher. And other times it'll hit it right on the number. Either way, I'm looking for an area of support as this pullback. Then I'll wait for my Tech 1 candle pattern, which is one of two things. It's either a Morningstar pattern in this trade because we're going up, or an engulfing candle. And here I have that Morningstar pattern. So we'll go back to that entry. Now it takes a great deal of patience to see this possible breakout. And you may have a different strategy, a stop loss strategy for something like this, but when you enter in a trade, oftentimes it's been said that you need to identify support and resistance in price to determine where to place your stop loss. To see a retracement to about the middle of this old consolidation range isn't uncommon. It would take a great deal of time for it to find some support and bounce and come back up. This is, after all, a 30-minute chart. What I'm getting at is waiting for the retracement, because the entry on a breakout, putting a stop loss, may involve just simply picking a number. And when we pick a number that we're comfortable with, like 45 or 50 or 60 pips as a stop loss, that isn't what the market's going to respect. That's not what price is going to respect. Price is going to respect support and resistance, which is what we see here when it found support, when it came back and hit this old resistance level. So just the same, when we use a stop loss, price is going to respect support and resistance in price, not our stop loss. And that's why oftentimes we'll see a trade develop and we can identify potential targets. We get stopped out because the stop may be placed too tight. And soon after, price will go after or towards those targets, and it's just a frustrating experience. So we need to minimize those stop losses. Getting in here on the breakout, well, we'd have to just pick a number, or maybe there's a strategy that says so many pips below this support level, which was this old high. But that really isn't always the correct way to go. You really want to find a location that you can minimize the stop. And here's a better place. At least here, we know that if we get in on the close of that candle at 30.10, our stop loss, even if we used it, the nearest low here is 85. That's a smaller stop loss than just picking a number and hoping that it doesn't get stopped out. That's not always the best way to go. You want to pick a price swing or a low in price, like we see here, that price is going to respect if it comes back towards it. So the entry is on the close of that candle at 10, and we want to pick off maybe 15 to 20 points. And price goes as high as 36. And they're relatively quick and short trades, and the stop losses, for the most part, are 1 for 1. We're looking at maybe a 15 to 25 pip trade for a profit, and we're looking for about the same amount as a stop loss. So these are better locations. It's just going to take patience. This may not ever develop. This may continue to run and just keep moving higher and higher. And that could be due to certain situations in the market, like the news or some kind of rumor. So be careful, pick your stop loss levels, and look for better entries. This is a 30-minute chart. You could go down to a 15-minute chart and perhaps make this range even smaller, a smaller stop, but of course maybe looking for smaller targets.